Welcome back. Well, the markets have come off a little bit from the top, and IT stocks in particular, they're under some pressure. But let's focus on another deal that was announced late last evening. JB Chemicals and Pharmaceuticals, they'll be acquiring Glenmark Pharma's cardiac franchise, that's Razel, for around 314 crores. To discuss the rationale of this particular acquisition and understand more about it, we're joined by Mr. Nikhil Chopra, the Chief Executive Officer and whole-time Director at JB Chemicals. Hi, Nikhil. Morning. Always good speaking to you. Give us a couple of details then about this. If you could tell us what are the margins that are enjoyed on this? Is there any synergy benefits? And also, what is the growth outlook for this business? I think it's been annualizing around 65 crores odd. Go ahead.
Yeah. Good morning, Najar and Prashant and Sonia. And first of all, wishing you all belated 23rd anniversary to CNBC and all you at your team. And talking more about the deal, this is more in terms of the guidance that we have been giving in terms of how we want to improve our presence in chronic therapy. So we have bought this brand Razel, which is rosuvastatin and combinations for India and Nepal market at a price of 314 crores. And the revenue is around 60 crores, which is low single digit growing as is. And the gross margins are healthy, 80% plus. That is where we stand. And talking about the synergy, we already have a team of 200 people who promote chronic products, chronic portfolio. So this will be a part of the priority 1 or priority 2 product promotion. And we will add around 50 more people that will help us in terms of how do we derive better EBITDA margins for this portfolio. Overall, what it does to our presence in the world of cardiology is in 2020, we were 13th ranked company in a 23,000 crore market, cardiology. With what we acquired Azmada, we became 11th ranked company, and now with the Razel coming in, we are now 8th ranked company. So we are only gaining ranks, gaining market share, and we are talking of a potential of 2,500 crore market, which we see growing at low to mid teens, low double digit to mid teens in the coming time.
Okay, so you said 80% plus gross margins is what you're sitting on with this business, right?
Yes.
Okay,
yes.
Got that. And a 2,500 crore market. Just want to understand what is the opportunity size from here on. Currently, it's at about 2,500 crores. What could the growth be? And how much could it contribute to your own business, say, over the next 1 to 2 years?
So, more than talking of 1 to 2 years, let me talk of what we see this as an opportunity. This market is growing at low single digit, rosuvastatin and combinations. And for us, with 2.5 to 3% market share in 2,500 crore market, we are looking at in next 3 to 4 years. Why don't we double our revenue? That is what is the opportunity for us going ahead, because it strengthens overall our presence, being the leader. What we have demonstrated over last 2-3 decades in the world of hypertension with Cilacar, and now with the heart failure pill, sacubitril valsartan, which we acquired, and now with this coming in, it cements our place. And it gives us huge opportunity in terms of how we can gain market share and improve our presence and serve more and more patients in the world of chronic diseases in the country, as being the burden being so high.
Will you be adding to your debt? How did you fund this particular acquisition? And since you're saying that you're looking to sort of grow within this space, any more acquisitions, will you be looking to take on some debt?
So we have taken long-term debt. I think 70-80% is being funded with the help of debt, and rest will be the cash debt will be generating will help us in terms of how we can fund this. And Sonia will continue to scan the opportunities available in Indian market because we are rightly poised, being a focused company, particularly in cardiology, antibiotics. That is where we stand, GI portfolio. So we will look at if there is any opportunity which comes across and which is EBITDA accretive. If you look at what we have done with Razel, though we are paying 4 to 5 times the top line, but EV to EBITDA is 9 to 10 times, which overall helps us in terms of being EBITDA accretive in overall the journey that we want to travel.
Just a couple of questions, Nikhil. One, you said 2,500 crores is the size of this market.
Of rosuvastatin.
Which is blood thinners. This is blood thinners, right?
Yes.
Okay, so this is this.
No, but it is lipid lowering agents.
Lipid lowering agent, and this segment is 2,500 crores.
Yes.
And Razel has a market share of, in that it has a market share of
2.5%, 3%.
2.5%, 3%. You also mentioned a 8% share. What was that? That was in what?
Oh, 8% I did not.
Okay, I think you said you're at 8th ranked now.
It was, yeah, in what I was talking, overall, if you look at cardiology market.
Okay, got it.
Which is
now,
today in India, 23,000 crore. From 13th rank, today we are 8th rank.
8th rank, got it. Now, you said there are 200, these are field agents who come along with this portfolio, who will push this, right?
No, 200 already, the field agents which we have, where we will be placing this product. And we will add 50 more people, which overall helps us in terms of having better reach and having good share of voice.
Why were they, could you tell us, I know we should put this to Glenmark, but why was this, what is the reason to sell this particular portfolio? I mean, if you can tell us from your perspective, and will you have to do a lot more to penetrate and push this drug into the market?
This would be a good question for Glenmark. I will reserve my comments.
Okay.
So, for your business, right, JB Pharma, if you look at the operational performance, the India business now constitutes about 2/3 of the EBITDA. Are you planning to take it higher from here? And will this be through the inorganic route? Anything that you have perhaps identified?
So, Sonia, what we have done in last, if you look at in last 2 years, there are 3 big levers if I have to talk about India business. One is the entire concept of making big brands bigger, which we have demonstrated in last 8 quarters. All the big brands continue to grow, gain market share. Second, what we have done, we have got into some new category of products, done organic new launches. That is what we have come into in the field of respiratory, in the field of pediatrics, in the world of cardiology. That is what we have done. And third, this is a 4th deal that we have bought on the table in terms of starting with Sensex that we acquired. Second is we bought this product Azmada, and third is the portfolio that we acquired from Reddy's, and 4th being Razel. So all these 3 put together is helping us to fuel our overall growth trajectory in India business. Also, just to share, from 23rd rank company, now we are 22nd rank company before the Razel deal for the month of November IMS as reported. And we continue to be the fastest growing company. We grew at 31% as compared to market growth of 16-17%. So these all 3-4 levers are helping us in terms of serving more and more number of patients, meeting more and more number of healthcare professionals, and be right to our entire guiding principle in terms of what more we can do with the right drugs that we manufacture in India for Indian population.
All right, Nikhil, you gave us a gross margins. What is the EBITDA margins out here? If you could tell us, and are there any synergy benefits as well? That's the first part of this acquired business. And when can it hit 100 crores? Maybe 2026? Do you think this particular product can contribute around 100 crores?
60 crores already. We are looking at, if the initial transition phase, we are looking at to grow at a low double digit, and probably then we want to see the trajectory going from 14 to 15%. So 26, 27, we should be close to 100 crores. That should help us.
Okay.
Overall, from a synergy perspective, Niger, what I shared earlier also, if you look at the entire journey in the space of chronic space, which we have been guiding, it only helps us to improve our contribution within India business now coming to 60%. And we are already with this team of 200 people, and we'll be adding 50 more people. We are already covering around 20,000 MD medicines and around 5,000 to 6,000 cardiologists who are the prime prescriber for statin therapy. So overall, it helps us in terms of widening our portfolio, getting more prescriptions from the healthcare professionals, and whatever A&P spends we are doing, it helps us to get the right product from the doctor community.
EBITDA margin I missed out, sir.
EBITDA margins are upward north, 55-60%. 55 to
60%. All right. I was trying to get that. I was wondering why you were waiting it. But thanks so much, Nikhil. You've given us a fair bit of details on this acquisition.
Okay, yes. And in fact, all the best for the future as well. You're looking to improve your presence in chronic therapy, in cardiology, and looking to double their revenue in the cardiac market.
All the talk of this cardiac drugs and statins and lipid lowering, it's giving me.
I was just going to say, hopefully we'll never have to be clients of theirs, right? I mean, use these products.
I hope. While we wish you all the luck with the business, Nikhil, we hope our viewers and of course you, all of us, stay healthy. But it's
healthy, fit, and fine.
Absolutely.
But it just goes to show, right, what kind of market that we're looking at, 2,500 crores. And I mean, cardiac issues, I remember Ekta had put out a piece where she said that India, the highest amount of deaths are due to, cardiac issues.
Lifestyle issues.
Lifestyle issues, absolutely.
Absolutely. Big one.
Okay, well, let's move on. Oil marketing companies are in focus. Crude prices are now at a one-year low of $75 a barrel. Of course, this was last week. But today, if you look at it as of today, it's $80 plus. But this has led to a recovery in marketing margins, which were under a lot of pressure for these companies. Since there has been a gradual increase in crude prices, what's the outlook for OMCs? We're joined by M.K. Surana, the former chairman and managing director at HPCL, and Harshvardhan Dole, the vice president institutional equities at IFL. Gentlemen, morning to both of you. Harsh, I just want to start with you to, set up the interview. What kind of upside do you see for some of these oil marketing companies, considering marketing margins are now at a 10-month high and most brokerages across the board have sort of raised their earnings estimates as well? So just tell us, what are the ballpark numbers that you see for most OMCs?
So if you were to look at the OMC pack, on an aggregate basis for the first half, they've reported loss of around 18,000 crores. And if you were to go by the consensus numbers, the consensus is trying to forecast that for the second half, the oil marketing companies collectively will register almost 40,000 crores of profit pool. And if you were to believe that to pan out, then I think OMCs are still trading at 3 to 4 times earnings. And these can comfortably trade at 8 to 9 times on a normalized earnings, which suggests that good amount of money can be made in oil marketing companies if this benign oil price environment sustains, say, over the next 3 to 6 months. I'd like to caution here. Typically, what we have seen is whenever we get into period of elections and state elections, one would have to be, toning down the earnings expectations as well, because there are direct, indirect price controls, which we have seen thus far. And next year, if you plot, there are quite a few elections around the corner. Yeah. So while I would want the OMCs to make money, one has to be a bit realistic.
No, so by the way, Mr. M.K. Surana, of course, former CMD HPCL is also with us. Harshvardhan, at these, if prices stay here, general expectation is that prices won't see a big spike, but there's no great fall coming as well. That's at least the expectation. So if oil prices stay here and prices at the pump also don't change, you think, as you said, earnings multiples could come up to 7-8 times? It's possible?
Quite possible. That is what, typically OMCs deserve to trade, given the fact that these are generating decent amount of cash flows, and across the cycles, the return ratios have been upwards of 20%. And mind you, they have grown their businesses without diluting their equity base over a period in time. So 8 to 9 times is a fairly conservative estimate, and still at a discount to global peers if you try to compare them.
Okay. Mr. M.K. Surana is also with us. Mr. Surana, higher crude prices continue to be an issue, and there's been no change in the petrol and diesel prices for, I think, about 6 months now. How are OMCs expected to tackle business in such situations, going by your experience of the past?
I would assume that, before I start, I would like to say that I don't comment on the share prices, so that I will leave to Harshvardhan only to deal with it. But I think in the last 6 months, we already seen the high crude prices of going above $120 or so. And now it has come to around 80. Last week, it has come down to 75 also. Again, there is some spike. So I would assume that the worst for the oil prices or the crude prices is behind. And oil marketing companies have tackled it in the last 6 months. So they should be in a better position to tackle it now. But at the same time, the prices have not been changed in the last 6 months, maybe because the government wanted to control the volatility and insulate the consumers against the high volatile prices. But I think now there will be more reason as the prices become benign to make it market driven, and then it may be better for the OMCs, because otherwise it will hurt their elections.
Apart from prices, do you think there's also policy support for OMCs now from the government's end? Has that improved over the last 1 year? I'm talking, about this compensation on fuel, the LPG compensation of 22,000 crores as well. Your views on that?
No, LPG is a controlled commodity as far as the domestic LPG is concerned. And this mechanism had been there for quite some time, wherein there was a subsidy element, and to the extent of subsidy, government used to compensate. There may be certain time gap between the time it is supposed to be given versus the time it is actually dispersed. But the compensation on LPG had been there and continues to be so. As far as MS and HST is concerned, they were decontrolled, and right now the issue is the pricing of MS and HST, which is not been changed for some time. And I'm not very sure whether there is any policy changes to that effect as of today. But I think in the time to come, we should see the lower oil prices compared to what we have seen in the past, because the oil prices were driven by 3 or 4 factors. At least some of them have been settled, and I think now it will be hovering more towards 80 than 90.
Harshvardhan, how much is the, we import 80% of our crude oil needs. What is the latest proportion of Russian crude in this? And, will this at some point go into the calculation of, overall oil prices and windfall taxes, etc.? I mean, should we expect a reduction in those taxes on account of this, the mix going up?
See, last time when we had done this exercise, what we found out was Russian oil typically is about 15 to 20% of the total basket as of now. But frankly, no company has been officially declaring this, and these are like channel checks. And 15 to 20% of the total consumption is a fairly decent number to me. And the benefit should actually accrue to the buyers, which is essentially the refiners, which are OMCs and some of these private refiners. So if the oil prices continue to remain the way they are, maybe if not now, perhaps towards the new fiscal year, there is a good chance that the excise duty should be tweaked down a little lower for the price benefits to be passed on to end consumers. But until then, in my opinion, there is a fiscal that government has to manage, and at the same time they have to let the oil marketing companies also make some money.
Okay. So for the second half of the year, what are you penciling in, Harsh, for the oil marketing companies, both in terms of earnings? You briefly spoke about it a while back, but in terms of stock price as well, what kind of upsides do you see? Both for upstream and downstream, what are you targeting?
See, oil marketing companies or PSUs in general are well poised to offer an asymmetric payoff. If you were to plot the price to book value for these companies over the last maybe 12 to 15 years, these are trading at a lower band. And typically at this price, we have seen a strong valuation support. So there is perhaps a less downside. And if the oil prices remain benign, we have seen that these stocks can trade at a substantial premium to their book. So the payoff is quite asymmetric and very appealing to value investors. So our recommendation is basically, be overweight on, oil marketing companies. We like all the three, not that, we like one over the other. We like them as a pack. We are slightly cautious on the upstream, also given the fact that while these companies trade cheap, there is no great volume growth. And relative to the downstream, we tend to be underweight. Although from this price, I don't see a material downside either in ONGC or OIL. But if I were to allocate my assets, I will be more overweight on the downstream companies.
Okay, Mr. Surana and Harsh, thanks a lot for joining in and speaking to CNBC-TV18, talking about the big move that we're seeing in the oil marketing companies. For the market, it's actually trending lower now. The Nifty is down almost about 90 odd points, perhaps moving in tandem with most of its global peers post the Fed's hawkish tone. The Bank Nifty is the only one that's holding fort, actually batting for the bulls this morning. Bank Nifty now in the green, up almost about 40 odd points. In fact, a good time to get Mitesh Thakkar for some technical trades. So we'll take a short break and come back with more. Stay tuned.
Okay, welcome back. 82 lower on the Nifty. Should you be buying this dip or wait a bit longer? I mean, as of yesterday's close, the 20-day is around 18,540, and we're about 40 points away from that. Mitesh is back with us with what he'd want you to do. Mitesh, hi, good morning. Over to you. Trades.
Prashant, on the index, I'm not very keen to buy because we are not above 18,600, and I think I need an hourly close above that for me to take an long side action. And if that doesn't happen, then I think the entry point will be closer to 18,450. So waiting it out. But on the stock side, L&T Finance is something which has given a good trading breakout. That's a buy with a stop below 94 for targets of 100. And HL, after a long time, is giving some kind of a corrective pullback kind of signals on the charts. So this is a sell with a stop at 26.75 for targets of 25.70.
Okay.
Any thoughts on Page Industries, Mitesh? I put a chart in the morning. It's at the day's low, 2.5, almost 3% lower. Go on. Yeah.
So Prashant, the overall structure isn't very positive or encouraging for me on the long-term and medium-term charts. The only thing is that it's closer to that monthly moving average, is closer to about levels of 43,800 to about 43,600 zones. But I think eventually we'll see lower levels over here. So maybe you'll get a pullback from around this 43,800 zones. But overall, I think I'm not very positive or enthused to buy into Page Industries at the moment. So it's a negative call for me.
Okay, all right. Well, just keep an eye out on some of these mid-cap tech companies. They're coming back in the last few days. Today, it belongs to KPIT Technologies, up almost about 5% and names like Persistent Systems have also come back in a big way in the last many days. But let's shift focus now to talk about the commodity markets. Manisha Gupta is here. Manisha, what's the one commodity you're tracking today?
I'm looking at the agriculture space today, and we have seen the food inflation in India and the global markets as well try to come down and consolidate as well. But I want to talk about the gainers first, and we all know on how the edible oil scenario for this year has been. So soybean seems to be closing this year in the positive, up by nearly 15%. Sugar continues to be a beneficiary there because we are looking at Indian concerns in sense of exports, and the global output also is on the weaker side. Corn up 10%, and rice clearly is an outperformer when you look at all of those staple food items, up by nearly 19%. And the reason for rice prices gaining up is because we are looking at, one, the price is trading at a June 2020 highs. That is because the global rice production and consumption, both of those numbers have seen a decline. But as you can see, the production has taken sharper hit on the lower side, is the reason you have seen that build up in sense of premium in case of the rice prices. Talk about the losers in sense of agriculture space now, and coffee has seen a 29% decline in this year. The Europe coffee demand in that sense has continued to decline, and that is weighing. Rubber is a story we've been talking about so many times because of the automobile, footwear, gloves, all of that demand has been declining as well. Tea as an industry, it was a difficult year for them. Lower production and prices declined by 5% as well. And this is the edible oil pack, which has seen a good amount of profit taking from the kind of highs that we saw in the month of March to May today in this year. So 11 to 20% of a decline across that sector there. And then there have been some commodities which were decoupled when you look at the Indian and the international markets. Wheat is one example. In the international markets, we are down by 2.5%, but in the Indian markets in this year, the wheat prices have gained up by 28%. The reason being that last year we saw higher sowing but lower production because of weather, and this time around as well, the weather is a bit of a concern right now. The Indian government wheat stock last year was 37.8 million tons. At the same time, like this year, it is right at 19 million tons. So we are less than half on where we are in sense of wheat stocks, and the low reserves could actually curb government effort to release stock, is the reason you are looking at record high wheat prices in the Indian markets. The new crop arrivals only would come in by March 2023, and that keeps the prices on the higher side. The second commodity is cotton, which also has a big decoupling with the international markets. Global markets have seen a decline by 23%, but the Indian markets are up 20% and to a premium of the international markets as well. This is because we are looking at global cotton prices, while they're trading at a 22-month lows in the international markets. For the Indian markets, we still are trading at a 6-month highs there. Industry is asking for import duty reduction. We're looking at weaker textile export numbers as well, and that is what is weighing onto the cotton and the textile industry for India.
Okay, thanks a lot, Manisha, for that. Well, moving on, Infosys co-founders have gathered to mark 40 years since their inception. Nandan Nilekani, who is currently the non-executive chairman of Infosys, says he will pass the baton to someone who is not among the co-founders of the company. He wants Infosys to be a no-drama, high-relevance company without any bureaucratic cholesterol. Take a look.
I do have this huge responsibility because going back to his phrase of 2006, I'm the last of the jokers left.
Do you miss having the other jokers around?
Oh, yeah. It's no one to talk to. I only talk to Salil, but Salil is so busy selling that I can't talk to him also. So I think my challenge is a little more acute because, since I have some founder's clout and all that, founder, I can do some. But I'll be handing over to a chairman at whatever point that I exit from the scene, who will be the first, not the first, but a non-founder. And now there's no plan B now. I mean, if I hand over to somebody and it doesn't work out, there's no plan B. I can't come back at some 75 or something. So, and I don't think any of these guys want to come back either. So
Maybe we should ask them.
you can ask them. Maybe they want to come back. They haven't told me. So anyway, I think so there's no plan B. So I have to make sure that when I exit the scene, I implement his vision of putting in place the leadership structure, people, and with the right values to take it forward. So that's really actually the biggest thing on my head.
And that's a serious issue. And I want to get you to comment on what you just said, Nandan, because as you pointed out, you said there is no plan B. In light of what has happened previously, what is it that you believe needs to be put in place to ensure that you get it right? Because this has been a challenge. Let's be clear about that. And secondly, do you believe that in hindsight, and I want to ask each one of you, and Mr. Murthy, I want to ask you as well, that this hard coding that at 60 you need to move away, at 60 you need to retire, at 60 it is the sunset. Do you believe in hindsight today that maybe it should have been different?
No, I mean, look, if not 60, maybe 65. All that is fine. But look, at the end of the day, we're all mortal, right? We're not going to be around. And that's one of the reasons why we're having the 40th is we don't know whether they're there for the 50th. So, really, seriously, I'm not joking. Let's get this done because I don't know what's going to happen 10 years from now. So, you have to, how do you create institutions that outlive you? How do you create institutions that cross generations? How do you create institutions that move from an ownership model to a totally professional model? In fact, when we first began, Murthy said, we will be the ultimate professionals company. I remember our first tagline was professionals company. But what you realize now is that, you need to have a combination of, professional ownership, all that stuff. So I think it's not clear to me what's going to happen.
It's not clear to you what's going to happen.
That's
not very reassuring to hear.
No, I haven't found yet a person whom I can hand off to. Let's put it that way.
What is the timeline that you're giving yourself?
I'm not going to talk here.
Okay, all right. I tried.
There is some riveting conversation with the founders of Infosys, 40 years of Infosys. I mean, iconic company, iconic brand. You can catch snippets of this conversation all day today. And of course, the full interaction will play out at 7 p.m. That is later today evening.